click on.
Hi, my name is Guy Terrell, and I'm the co-author with Jack Trammell of Cookbook Investing, a book suited for individual investors, even those without experience. We had a 5-year research project. Not we didn't intend for it to be 5 years, but it took 5 years from the time we started this process of looking at our successes and failures in the stock market and those of our friends as well, and finally putting together guidelines that made sense. So in September of 2024, we opened a self-directed account at Merrill Lynch, a very small account, and began to use our methodology to buy stocks. And here's what that has turned out to be. So it's a small account. It's $5,688 as of November 22nd in 2025. And it's been higher than this, and we've been constantly adding to it. So any portfolio any group of stocks you pick, you've got to be diversified. And this one has a REIT, an investment trust. This has properties and rents them out. Micron Technology, they make DRAM memory, DRAM memory chips. Nova Limited, which makes processing and features for AI producers. Blue Owl is a investment company. Super Computers is a company that installs and builds servers with artificial intelligence chips. And Stellantis is the old Chrysler and several European brands combined, and they make cars, of course. So we've got some here like Nova and Micron that are very close in what they do. But these others are a little further afield, although Super Computers is related to AI. Anyway, let's look at what we did with Micron Technologies. And again, we're talking about small amounts of money. We'd put in $100 and that we could only buy one share. So in September 3rd, 2024, we bought one share of Micron at $89.13. The analyst reports on Micron were mixed. Some said buy it, some said sell it. And so it lingered here in the sell zone, so to speak. And the next month when we made our investment, we put some more and some more. And then it went down and this year, it went in April of this year, it went down below our purchase price. So we jumped on it and bought 3 shares, which incrementally is right many more. Anyway, we ended up with 10 shares. And the last 2 we bought were $123. The stock today is $207.37. Today is Saturday. As of Friday, it was that. But we have had success with it in that more and more people are saying, oh, yeah, this is going to make money. And they've had a couple of earnings reports since then. So from September of 2024 to June of 2025, there were several earnings reports, and they began to look better and better, and analysts and mutual funds began to jump on the stock. So we did well on this stock. We've made $1,000 on it. Our cost was $887, average cost. No, the total cost was $887. Average cost was that as well. So that one has worked out. Now, some others haven't done as well. And we've lost money on some of these. But that's the beauty of a portfolio, of a diversified portfolio, is something's going to do better than you expected. And from year to year, one that does well this year may not do as well next year. But we'll just show you what we did here. View positions. So here for Stellantis, we bought 5 shares at 13. Then it was looked hopeful back in the beginning of the year, and then things began to fall apart. And by April of this year, the stock had gone lower and lower and lower. So we bought more and more because we know that eventually this will turn around and we'll make money on it. We've only lost not very much, less than $100. And here's the thing about companies is if your employees show up every day for work, and they don't show up just to sit around or to make trouble or anything, and if they did, they would be fired. They're there to improve processes, to do a better job, and to make more money. And that's what they do in 99% of the time. So we believe that Stellantis is just one we're going to have to wait a little longer on. Supermicro Computers was a high flyer when AI was really strong in 2024. The stock went very, very high. Then it went very, very low. And while it was low, we bought some. And then as it rose, we bought some more. And it has risen to $32.19. We have a small gain in it, but we believe that they're going to get their act together and will do better. This is Blue Owl Capital, and they apparently have had some difficulties. That's down 33%. But we're not buying stocks for this year or this month or any month. We're buying them for the long haul. Another stock that caught our eye was Nova Industries, and we would like to add more to this one, but it's an expensive stock. So you get the idea. You buy a stock and you hold it, and you do have to watch it. But the main thing is to buy in the troughs. When the price of the stock goes down, you buy. If you still believe in the stock, you buy and buy more as it goes back up. And you will do well at that point. So in this total portfolio, we have a gain of 20% from September of last year till November of this year. That's a little over a year. That's a pretty good gain. If you could make 20% every year, you'd do fine. That's what we do. And that's what we want you to learn how to do as well. Look for the book. Send us your questions. Thank you.
Wait.